You're looking at a daily chart of the Nasdaq, and we can see that it's had a couple of legs down here. Started back in November 22nd. That was the peak, 16,212. Sold off, more than 22% to March. Had a bear market rally here, which was, designed to have the shorts cover and think that the market's going back to highs, and have the bulls think everything's all good. And that wasn't the case, because it had a massive sell-off here until the middle of June, more than 27%. And then we see the next bear market rally, which is about 10 weeks in June and most of July. And then in August, it fell out at 13,181 was the top, and it was down 12.5% from peak to trough on Thursday. So that's already a nice little leg down, and another 10-12% would be appropriate for the third leg down on the Nasdaq. I want to take a look at the 10-minute chart, because ever since Jerome Powell spoke right here, the Jackson Hole speech, it just has been constant selling. I believe they had the market was priced in 2 to 2.5% interest rates. They thought he was going to pivot, pause and then pivot. But now they probably actually believe him, and maybe they're pricing it in at 4% or even 5%. So they're going to overcook this thing to the downside, and that's where the opportunity lies. When the pendulum starts swinging the other way, there'll be big opportunities. But you can see here these air pockets. Monday it opens up and just falls out 120 points in like a half an hour. Tuesday the same thing. Didn't take long. But the second bar here, it's just air pocket straight down. Constant selling. Wednesday, same pattern, opened up a little higher, and then within 40 minutes, it dropped 250 points or more. And then on Thursday, it just gapped lower and went straight down, but then tried to rally into the close on Thursday, and then opened up higher on Friday. It looked like we're going to have a nice rally on Friday, and then there's another air pocket. So there's just sellers out there, and they're re-rating stocks at maybe a 4 or 5% interest rate. And that's going to act as a tax on growth. And that's why the Nasdaq is doing worse than the other indexes. If I can show you here that the Nasdaq is, I think, 3.3% below its 50. Yeah, 3.3% below its 50 simple moving average. So it sliced that, and it's comfortably below it right now. And the Russell actually is doing better, which is kind of like the risk on index. The smaller caps, it's only 2.1% below its 50. And the S&P 500 is, it's got stocks that aren't, they have a little more earnings and aren't considered all growth stocks, although there are quite a few, and that's 2.4% below its 50. So the Nasdaq is the index that's going to get hit the hardest in an environment like this. It's not going to last forever, but for now, they're just going to re-rate the stocks lower. Here's InPhase, and it's gapped up on earnings, and it's been holding its gains so far. But I mean, eventually, in a bear market, they get all of them. It sliced its 21 EMA last week, and is still trading well above its 50. You can see on the weekly, it's just, this is a big consolidation period here from this last gap higher. So I always want to take a look at the weekly chart. Yeah, this is almost a year here for this consolidation. So InPhase still looks pretty good. It's in the energy and solar industry group, which is the #1 group, and we can see why it's been holding up a lot better than the rest of the groups. Like it's not doing great, but it's doing better than the rest. It has had some gains and holding up well. I want to take a look at another stock in the group, First Solar. First Solar is I really don't know why. The earnings have been really spotty on this thing. Here it is on the weekly. You could see it sold off 16 weeks in a row, formed this base. It did top before the Nasdaq. So the Nasdaq topped November 22nd. This one topped, a couple weeks before, and then formed this base, and is now really seeing some nice buying coming in. They obviously, the recent legislation is going to help First Solar, but the earnings, like I say, is really spotty here. Here you can see the long base, 123 to 61. It's 16 weeks in a row, and then formed this little bottom here and now gapped higher, and it's holding above its 10 EMA. So for solar, looks pretty good to me. Let's go to the biotechs group. I want to look at RXDX. This is one that we had on our watch list here. It's formed this nice base. Consolidated nicely in here, then it's taken off recently. And if you look at the weekly, you can see this nice big deep base and real nice buying coming in here, the last 6, 7, 8 weeks. So this is showing strength. Biotechs are strange because they're not going to have the earnings, and if they get one drug approved, they go berserk. So it's not just based on earnings. So it's a really, outhouse or penthouse type of industry group. Another one that I wanted to take a look at here in this group is Catalyst. Catalyst is broke out. They have settled a patent lawsuit in July, and it's been taken off ever since and holding its gains. It's bounced off its 21 EMA on Thursday of last week. But you can see here, this little consolidation period and then the breakout when after the lawsuit was settled. This one does have earnings and sales growth. You can see down here. So yeah, I really like this stock because of the earnings growth, consistent sales and earnings growth. So this is definitely one to watch out for. And I mentioned when you get a drug approved or when you have a positive, phase 3 trial, like Karuna did, this thing just took off on what day was that? August 8th. Yeah, 71% gain on 991% above average daily volume, and it's holding its gains, which is kind of rare in this market. This is definitely a buyout candidate as well, so it's probably catches a little bid because some of these sharks like Pfizer or Johnson and Johnson or Bristol Myers, somebody's going to buy this company. I don't know which one, but it's very likely that it will be bought out. Anyway, the biotechs are very strong. It's one of the top groups. I like the renewables as well. And Montauk is one of my favorite in the renewables. You can see here on the daily, it's got this consolidation, little pullback to a moving average. If you look at the weekly, it's big, kind of like an IPO base, still in the, I would say, the institutional due diligence phase here, but this one does have earnings. And you got to watch for the renewables here with this recent legislation. This has got the growth that we're looking for, and definitely one to watch. CEG is another one. Constellation, which is an IPO, had this little base, broke out and holding its gains above the 10. This one has earnings also, big earnings, so and big sales. So this is definitely a quality stock, which will benefit from recent legislation as well. And you can see here the little IPO base, and it's trading higher. So this is definitely one that should be on your watch list. And there's one more that I want to look in this space, I believe. Oh, yes. Two more, actually. This is a recent IPO as well, and it's just been consolidating here along the bottom now. It's trading above its 21 EMA. It does not have the earnings that we want, but it's definitely benefiting from recent legislation. And it should be one on your watch list. Another one that I wanted to show you was ChargePoint, which is located there in the old Silicon Valley, my old neighborhood, Campbell. And this one just kind of scuffling along the bottom here, but above it's a 50 simple moving average. They just reported their first $100 million quarter. They're still losing money, though they're not profitable. But they probably will be soon, and they are benefiting from recent legislation as well. So that is another one to watch in this space. I want to take a look at the retail super mini markets. I've never been to either one of these ones that I'm going to show you. This is the industry group, though. It's definitely been on a tear, just lower left to upper right. That's what you want to see. Even in this bear market, it doesn't care. And some of the leaders in this group is Murphy. You can see Murphy just, you don't have to hold it very long to make money here. It's just grinding higher, lower left to upper right. This thing's making buku dollars here. It's got the sales and earnings growth. I think they're in 27 states. Yeah, it says here 27 states. I've never been to one, but they're adjacent to Walmart, many Walmarts, and this thing is doing great. Traded, right at its 21 EMA, closed a tick below it on Friday, but this one's holding up well. The other one I wanted to show you was CASY. Never been to a CASY, never heard of a CASY, but the stock is doing well, and it's kind of set up right now here as it pulls back to its 21 in lighter volume. So that's definitely one to watch in the retail mini market space. One more group you want to see, LNG, liquefied natural gas. So anything with an LNG and it's going to be going higher, right? This one broke out. This is Cheniere, pulled back to its 21. It's doing nothing wrong. Looks pretty good. There it is right there, the consolidation, and just holding on to its gains here. This one has big time earnings as well, big time sales growth. So definitely one to watch. In the LNG space, that's Cheniere. Another one is GLNG. Yeah, as long as it's got an LNG in the ticker, you're good. This one's formed a base, tried to break out, then pulled back to the buy zone, but it's got quality earnings, and last quarter nice sales growth. So definitely one to watch. And FLNG, right? Pretty much similar chart pattern to GLNG. These are pipeline stocks and liquefied natural gas area. And the last group that I wanted to show was the Telecom Group. Just a couple of stocks here. Clearfield, this one broke out and was leading. It had momentum. And then when, Powell made his speech, everything fell out. And it's been in a bear market ever since. This one traded down to its sliced its 21 last week on heavy volumes. That's a red flag for me. Another one in the telecom, this is a cable stock, is HLIT. This one's you got to look at the weeklies. This is a nice cup. It's trading 4 weeks tight. It's not bad, and considering this market, it's holding its most recent gains. It's got some big blue volume bars coming in, so that one looks pretty good as well. Anyway, tough market environment, and we never give up.